One of the first questions people ask me when they get into trading is, what should I actually trade? Should I trade Forex? Should I trade stocks, crypto, maybe indices, gold, oil? And there's so many markets available now that beginner traders often feel overwhelmed before they even start trading. And the thing is, there isn't one perfect market for everyone because different markets behave differently. They move in different speeds, they have different risks, they have different advantages and disadvantages, different personalities. So in this video, I want to walk you through 3 markets that retail traders, or most retail traders, end up looking at: Forex, stocks, and crypto. And we're going to talk about how each one works, the advantages, the disadvantages, and what type of trader each market tends to suit. In this video, I'm going to focus on these 3, but I have, however, done a video on which is better to trade, Forex versus futures, where I cover all the differences on those 2, and you can go and watch that one there. All right, let's start with Forex. So Forex is the largest financial market in the world. Currencies are being exchanged globally every single day through governments and banks and corporations and investment funds and retail traders like me and you, and they're all participating in the same market. So the daily volume in Forex is estimated to be somewhere around $7 trillion per day. And what that means is trades can usually be entered and exited very easily with very little friction. Now, the most common pairs that you'll see traded are things like the euro dollar, the pound dollar, and the dollar yen, and these are known as the major currency pairs. And because they're traded so heavily, the spreads are usually very, very small, which is great for traders. Now, another advantage with Forex trading is accessibility. You can also trade with a relatively small account or small accounts, and you can trade 24 hours a day during the week. And another one is that most brokers are fairly flexible with position sizing. But Forex does also have some challenges, and that's that the market can be heavily influenced by things like interest rates, central bank policy, economic data, and things like that. And what that means is there's sometimes some big moves can happen very, very quickly. So it's important to understand what drives currency markets, because you want to make sure that you're factoring that into your trade plan. But overall, Forex tends to attract traders who like liquid markets and like flexible trading hours. That's the big one for me. So now let's talk about stocks. Stocks are simply ownership in companies. And when you buy a stock, you're buying a small share of that company. Companies like Apple, Microsoft, Tesla, Amazon, and so on. Now, the stock market has some advantages. It has some unique advantages. One is it's the biggest long-term growth. Over long periods of time, stock markets have historically trended upwards as economies grow, which means stocks can be traded actively. But they can also be held as long-term investments. Now, a big advantage, in my opinion, is negentropy. Now, when something has entropy, it means it decays and it becomes more disordered and there's more chaos to the thing. Well, negentropy is the opposite. It means that it's always growing and evolving. So when I look at the chart of, say, the S&P 500, a stock chart of the 500 top performing businesses in the world, I see human innovation. That is something that's always continuously evolving and growing and adapting, with bright minds behind boardroom tables getting together and mapping out how they can innovate and how they can beat competition and how they can solve big problems. And that's all happening sometimes whilst I'm asleep. So when you put your money into a stock, I see this very negentropic action taking place where my money is moving towards where I want it to go, rather than, say, paying for a property which is decaying and there's always repairs, and as soon as you put that brick down, it's decaying in the sun, or as soon as you fix the roof, it's now, dissolving in the weather, and you put a fence up and it's rotting, whereas stock market is growing and evolving. So I look at stocks as human evolution. Now, another advantage is the sheer number of opportunities. There are thousands of stocks available, different sectors, different industries, different market capitalizations. So that's great. And then lastly on this, the tools. The advantage is the tools that you've got available now, like Forecaster. Look at this. So I use Forecaster for my investment analysis now, and I can do exercises that used to take me about 3 weeks in about 5 minutes. And if you go to, you've got all of this information here, you can click on fundamentals, You don't have to go to different stock screeners and Yahoo Finance or, and go and pick different bits of information or read Financial Times. You've got everything here. It does a lot of the legwork for you, and it teaches you things about Altman Z-score, the solidity of the business, so how likely it is to go bankrupt, how likely it is that it's frigging its earnings and manipulating earnings. We've got the Benish M score as well, and you can see all of these stuff just there, right? So it's amazing. Not only that, you want to see what's happening with the market. You could go up and look at the full analysis. You can look at a qualitative scoreboard. You can see what's future expectations. You can just click on this and the AI agent will come up now and just do all of the homework for you that you need to know in order to pick this as a good stock on your watch list. And look at that, we've got market performance, sentiment overview, we've got all of this stuff. And one thing I love about this is it tells you what's been going on internally with the stockholders, the shareholders, what they've been doing, who's been buying and selling their shares internally as well. So phenomenal tool. Now, having said that, stocks can behave differently from Forex. Individual stocks can move dramatically when company news appears, earnings reports, product announcements, management changes. That's why I like to use Forecaster there. By the way, if you guys haven't learnt about Forecaster, I've done tons of video on it and I'll put a link to that in the description. But traders need to be aware of these events, okay? Stocks tend to attract traders who like analyzing companies and market sectors. All right, then we have crypto. Crypto is the newest of these three markets and it behaves very, very differently. Cryptocurrency markets trade 24 hours a day. There's no market closing times, no weekends or anything like that, which means price can move at any time. Crypto is also known for its volatility. Prices can move much more aggressively compared to Forex or stocks, which creates opportunities, but it also increases risk. Another important difference to mention on crypto markets is they're still relatively young compared to these traditional financial markets. So regulation is evolving, market structure is evolving, and sentiment plays a massive role in that. Crypto tends to attract traders who are comfortable with higher volatility and rapid price movements. Now, something else worth understanding is that each market has its own personality or behavior. Forex tends to move in relatively structured trends with a lot of consolidation as well. Stocks often react strongly to company news and earnings cycles, and crypto tends to move in powerful momentum waves driven by sentiment and hype. And the reason that this matters to you is because traders usually perform better when they focus on one environment and learn how that one environment behaves rather than constantly jumping between markets. Markets develop patterns, but those patterns become easier to recognize when you spend enough time watching them. So which market is actually the best to trade? Well, honestly, it depends on the trader. Forex tends to suit people who like liquid markets and structured price movement. Stocks suit traders who enjoy analyzing companies and longer term trends, and crypto suits traders who are comfortable with volatility and rapid momentum. So there isn't really a universal answer, but the best market is usually the one that fits your personality and also fits your schedule and also fits your training style. Now, the good news is that the underlying principles of trading remain the same across all markets: price action, risk management, and psychology. And I've been over these in lots and lots of videos, and those foundations apply everywhere. What changes is the environment in which these principles operate. So rather than endlessly searching for the perfect market, it's usually better to choose one, learn how it behaves, and build your experience there. At Tier 1 Trading, we teach trading. Simple. And although we focus on Forex, once you learn the skills, you can apply it to any market. So if you're serious about trading, then check out tier1trading.com or an upcoming training. I'll stick the link in the description and the pinned comment. Also, if you're brand new but you want more confidence, check out my 30-day trading challenge where you can work with me to gain confidence over the next 30 days. And until next time, let me know what you want me to answer in the comments, and I'll see you in the next one.